First of all, a warm welcome to all of you to this Delta training for S/4HANA Cloud, covering everything you need to know around finance and GRC with 2108 and 2011. My name is Katrin Deisner, and I'm a product manager for S/4HANA and part of the S/4HANA PSCC enablement team. And I'm accompanied by my teammate.
Yeah, by Uli Hauke. Hello, everybody. Also, warm welcome from my end to this Finance and GRC Day. And yeah, I think we will have wonderful sessions. Katrin, do you have more details?
Yeah, so as mentioned today, together we have the pleasure to co-moderate this Finance and GRC Day for S/4HANA Cloud. As you see, we listened to your valuable feedback and dedicated the whole day of this Delta training exclusively to finance and GRC, so that you, dear participants, can really benefit from more in-depth insights into the individual areas. And this is the first out of 4 sessions that we will run during the course of the day on the topics of finance and GRC. Before we start with the actual session, some housekeeping remarks up front. Please be aware that this session is being recorded. If you are interested in the recording, it will be made available on the landing page after the training. And if you wish to hand in questions to our speakers, we kindly ask you to make use of the Q&A function at the bottom of your screen. Please do not use the chat function for this. The Q&A is the place to go. And the speakers will answer your questions via the Q&A tool after they have finished their presentations and demos. So if time permits, we might take one question live, but we expect that the majority of questions will be answered via the Q&A. Yeah, and having said this, I would now hand over to Uli, who will walk you through the agenda. Uli, over to you.
Thank you, Katrin. So as Katrin said, we split it the whole day into 4 blocks called here Finance and Risk, 1 of 4, 2 of 4, and then on the next page 3 and 4 of 4, for technical reasons mainly. At the end of each block, we'll do a short break. And before the break, we are doing a short poll on the presentation so far. Yeah, and allow me to go with you through the sessions of today of Finance and Risk. So we have wonderful speakers and we have wonderful sessions so that you get the latest and greatest of not only finance, but also including GRC today. So the first part this morning until 10:55 will be on management accounting and margin analysis presented by Janet. She'll give you the latest and greatest news. We have an overhead management, product cost accounting, margin analysis, and discuss a bit the future of the internal order with you. Then my colleague from finance operations, Victor, will give you an update on the new credit management innovations, the new credit management app, the integration to CRM or to service. And then Donatella and me will guide you through the news in accounting and financial close, namely the intercompany reconciliation, the intelligent intercompany matching and reconciliation, the accruals engine news for deferrals, as well as an update on some on the discounting report, the new one. Then we'll have a break, and after the break, we're going into part 2. And the part 2 will start off with the topic of group reporting updates presented by my solution management colleague, Philip. Then we get an update on revenue and cost accounting presented here by Volkmar and Chen Chu. And then an update on the financial planning content in SAC. Here, my colleague Holger will present the latest content update, which covers the group reporting or group planning content in SAC. This concludes then part 2 and we are going all to lunch at 12:40 to 13:30. And right after lunch, we'll continue with some finance topics here. So Jürgen Jensen will guide you through the updates of treasury and risk management, and my colleague William will give you an update on the cash management innovations. And then my personal highlight, and also in my humble opinion, the 2111 highlight in finance, or one highlight, is the update on real estate and leasing, specifically the called intelligent real estate management, led by or presented by my colleague from the US, Tom Anderson. Yeah, and then we'll see some GRC updates on financial compliance from Alain and Katrin herself, right, Katrin? Mm-hmm. And the international trade update then from Christian Stadler. Yeah, this concludes part 3, and then we're going to have the last coffee break this time zone, and we'll start off with the pure GRC block 4. An update on privacy governance from Dominic, document compliance from Erika, and an update on the identity access governance tool from Sharma, I also think from the US, right? Mm-hmm. Mm-hmm. Yeah, this is the overview on the sessions. So a lot of sessions, a lot of high-profile speakers here. I'm very happy that we got them all on the table. And yeah, I think in principle, we would be ready to go. Let me check if Janet already joins the session.
Yeah, I'm
Janet,
here.
are you already here? Ah,
yeah,
I can see you. Super. Are you ready to go?
I am now.
Yes.
So
okay. Yeah, then let's
so basically
start off.
I just have to share. Okay.
Yes, that would be great.
Okay.
Stop sharing here. Okay, so Janet, what's new in management accounting and margin analysis? Thanks for your time.
So, okay, quick check. You can see my screen before I start talking. And okay, great.
Yes.
Excellent. So for those of you who don't know me, I'm the Chief Product Owner for Management Accounting, which includes the topics of what we used to call controlling and margin analysis. And what I'm going to walk you through the next nearly an hour is, first of all, I'm going to take a step back to 2105 to talk a little bit more about universal parallel accounting. And obviously this isn't going to be a complete repeat, but just the couple of new things that are coming don't make sense if you don't understand the ideas behind universal parallel accounting. And then those of you who've been watching what's been going on in universal allocation, I'll talk about some of the changes to the cost flows there, and also some of the changes that have been introduced in settlement for those sort of companies that are working with assets under construction. I'll then look at product costs and how we can now include freight costs, a couple of new options there. And I'll talk a little bit about margin analysis. So the improvements to the cost of goods sold split are very definitely new things. The product hierarchies is just something I seem to have had a lot of conversations about recently, where I think people don't necessarily realize how it works. And then our favorite topic, internal orders, are they still there or not? And that'll wrap up my session for today. So let's start with universal parallel accounting. And this is a topic, any cloud customer that had more than one ledger running and was doing that in 2105 now has parallel accounting running. And the default is that the leading ledger has got all the different local accounting principles. And then there's a common accounting principle across the top, typically IFRS. But if you've got an organization like Chemours, that leading accounting principle might be US GAAP. And so the idea is that whatever happens going forward is that everything's working in parallel to those two ledgers. The key point that I wanted to make with this slide here, though, is less to teach you what's happened, but I've spent a lot of the last 3 or 4 months asking questions about what does this mean for on-premise and what should I do now? Because what we're saying with this slide is SAP's strategy going forward is to have 2 ledgers for the different accounting principles, and that you're separating your data by ledger, and what a great thing this is. And essentially, this is what in the OP world we were calling a single valuation ledger. But customers who've been doing parallel valuation in the past, who've had a group view or a profit center view, have been coming to me and saying, yeah, we need to do a single valuation ledger because that's the future. And we've actually got gaps there, which are referenced in this note that I've attached here. So it's important not to get too hung up on what's coming and keep with that old multi-valuation ledger if you're working in on-premise at the moment, even if you're doing a new implementation, because I seem to spend a lot of time talking to customers about that. There's a lot of confusion about that. But to go back to parallel accounting, the idea is that it's a complete double flow throughout these different scope items. And I think the easiest way to imagine it is to think about an asset, and how you depreciate an asset is typically very driven by the time of the kind of accounting principle you're reporting to. You know, how long is the asset going to be written off over? Obviously, it's different if it's written off over 5 years versus over 7 years. So even if the initial cost of the asset is the same. And what that drives then is everything else along the chain. So that depreciation flows into cost center accounting. It means I've essentially got two views on my cost center. And then I start to allocate those costs. So they might be production costs if it's a fixed asset that's working on my production line. They might be just general marketing type costs if those assets are laptops or something that I'm using for my daily work. And the idea is that universal allocation picks up those separate flows and says, okay, your depreciation according to French GAAP and your depreciation according to IFRS, and makes two separate allocations to the cost center. And then as the cost centers start to work, start to provide activity, you've got two separate views of that activity flow, two separate views of the overhead, and two separate views of anything that consumes that activity. So in this example, we're talking about production orders. We've got things going on the shop floor where I'm using machine time, I'm using other types of activity, and that's impacting my inventory. And of course, within the scope of inventory, I might also have different legal requirements. I might have a different way of writing off my inventory, depending on whether I'm using French GAAP or IFRS. And all those differences are then potentially going to flow into my market segment, and I'm going to have different flows on my profitability segments. And so when we come to look at the COGS split later on in the presentation, it's important to remember that margin analysis is potentially picking up different cost estimates, potentially picking up different assumptions for what your cost of goods sold are worth. So if we move into the area of overhead management, you'll see here that I've got a ledger enablement across all the period close activities that are included in the scope of cloud. So whether I'm calculating my actual cost rates, whether I'm performing an allocation, whether I'm doing a settlement, and I potentially got different prices for each of my activity rates. Now, a lot of people panic and say, but you know, things only happen once. I only move goods once. I only do a confirmation once. And that's why it's important to understand the way something like a direct activity allocation works. So you see in this example, I'm reporting 1 hour of work from a sender cost center and a sender activity type to a receiver cost center. So at the capturing level, I'm moving goods once or I'm performing activity once. But if you look behind the scenes, you see here that there are two documents being created out of that. The one is into the 0L ledger, and the other is into the 3L ledger in this example. And they're two different assumptions behind the value of that activity. And that's going to be reflected all the way through the food chain after that in terms of what do you do, how do you settle those costs, how do you do any further allocations, how do you include those costs in margin analysis and so on. So you see that example here. The planned rate is typically only one, it goes into ledger blank at the moment, but you've got potentially two rates for your actual activity rates. And this is showing up now in what finally is new with 2111, namely that overhead calculation and settlement can be started by ledger. And of course, a lot of people say, yeah, it's all very well, this new stuff, but it's actually a complete pain for our users to remember to settle twice, once for each ledger, or to run the overhead calculation twice, once for each ledger. And now with 2111, you've got a little bit more comfort there. If you're running two ledgers, you can set up both of those jobs to run in parallel, updating both ledgers, but obviously with separate values. And as you move on through, you'll see every report has the ledger in there. And I think it's important to really think about what the ledgers mean when you're doing that reporting, and also understand the layering of the ledger. So if you're doing commitments, they're going to be sitting on top of a ledger, normally your leading ledger, whichever way around you've chosen to do that. I think it's often just as important to say what isn't in as what is in. So that ledger enablement has really only been done for universal allocation. So you'll see in our tools that we've still got the old assessment transactions, we've got the old distribution transactions, but they don't support multiple ledgers. So at the latest now, you need to be thinking about making that move to universal allocation. If you're looking from an on-premise point of view, things like indirect activity allocation, things like template allocations, things like the revaluation of activity prices, they don't yet support multiple ledgers. So you're already seeing my gap list for why haven't we enabled this in on-premise yet. The other key thing is really think about event-based revenue recognition. If you're doing any kind of project manufacturing, you need to be aware that this is the way forward. This is where SAP is investing. And the classic results analysis isn't going to support these things in the future. And an important gap at the moment that we really need to fix as soon as possible in cloud is what everybody would assume is if I've got two values coming onto a project, I should be able to say that I only want to capitalize according to IFRS, according to different rules, as according to my local gap. So that's something we still have to fix, but that will come in the cloud shortly. And moving along the food chain, those different values are also reflected in separate material prices. Again, something we've had a little bit of confusion about, why do I need all these separate material prices? So during the conversion, we wrote the same material prices into every ledger. But going forward, you need to be careful about which ledger you're actually doing an update in and make sure you get the right values into each ledger. If you're doing product cost planning, you're going to see that you've potentially got different cost estimates with different values in each of those ledgers. And we'll see that later when we come to pick up the results of those cost estimates for the cost of goods sold split in margin analysis, that I've potentially got 2 or even 3 different flows. And I'm going to be potentially valuing my cost of goods sold based on the cost estimate in those different flows. And those of you doing actual costing, you've got a choice. Some people choose to do actual costing right across their whole organization because they're that kind of industry. Others say, oh, I'm only going to do actual costing in those countries that require it, like Turkey and Russia and Brazil and so on. What's important to know in the cloud is that all your actual costing is taking place with reference to a ledger. And obviously you choose by the ledger company code combination then, if your ledger 0L is going to be for everybody, and if you're going to just run actual costing in that ledger for those countries that need it. Another thing that's very important to bear in mind at the moment is production accounting. The new architecture, the new parallel accounting also means you have to do event-based production accounting. Now, some of you who listened to me last year will know I was already talking about event-based production accounting then, but now it becomes really critical that you start to make that mental switch. So the old BEI scope item is using the old tables, it's using the COSB table, and it's doing the old way of working that you wait till period close, and then you look at each order and we say, are you completed? Okay, I'll calculate variances for you. Or are you still underway? Okay, I'll calculate work in process. And you calculate that data, and then you use settlement to move it into the financial accounts. Now, what changes with this 3FO scope item is that all those postings are taking place immediately. So every time I issue material from stock to the production order, I'm also reporting work in process and reporting in those double flows. So you'll see here a blue set of boxes and a yellow set of boxes. So you'll see my material consumption, whatever I issued to the order was issued once, but I've got 1,000, whatever they are, dollars or euros in the one valuation and 1,500 in the other. And in this example, we've kept it simple. The activity allocation was the same. So I've got 500 in both, but my overhead, which is driven by my material consumption, is showing as 100 is 10% on 1,000 and 150 is 10% on 1,500. And all those 3 postings are immediately showing up as work in process. So I'm immediately sending a follow-on document behind that material movement or behind that confirmation that says, first of all, here's the overhead. if there is one according to the costing sheet. And then here's the total value of my work in process to date. As you then go into stock, you have the same basic premise. You've got two values for your stock value. You've done two cost estimates, the one of which says the value of your finished goods is 1,490. So what you see on the top left. The other says the standard value of that good is 1,985. And then I've got a total debit that says the sum of the costs on my order. In the blue valuation are 1,000 plus 500 plus 100, which is 1,600. And the sum of my costs in the yellow valuation are 2,150. And as soon as you deliver that production order into stock, the variance calculations kicks in and says, I need to explain those differences. And so in the blue valuation, I'm trying to explain 110 euros. And in the yellow valuation, I'm trying to explain 165 euros. And then I start to break those out into the reasons, was it a material input price change? Was it a quantity change? Whatever else is in there. But the key point that I want to make here is that you're always getting these double flows throughout product costing. So you've got them throughout your product cost planning, you've got them throughout the production order, and potentially these values are going to flow into actual costing and give you these different values there. So very important to bear in mind that you've got those double cost estimates and the double values and the need to report immediately using the event-based approach. So just to give you an idea of how this works, the idea of the order, I think this slide is nearly as old as my SAP career. So you start with creating the order, you then issue materials to it, you perform confirmations, you start to do partial deliveries, and then you do your final goods receipt when your product is finished. And what we're doing is sitting over that, calculating the preliminary costs, and as I said in the previous example, issuing raw materials, confirming activity is potentially going to trigger an overhead costing if you've got your costing sheet set up to, as in my example, kick off a material overhead based on the material usage, and you're potentially going to be kicking off work in process. And as you start to do that partial goods receipt, you start to reduce that work in process, and you can already start to see where your target costs stand. And then finally, as you get round to being completed, then all that work in process is reversed out, and you've got variances being calculated. In principle, nobody in controlling should have to do anything. In practice, of course, you've got an error log sitting over this. If we're not able to do any of these follow-on processes, you've got an event-based monitor that's showing you what happened and potentially showing you need to fix some of this. So you will need to put somebody in place to monitor this and make sure that it's all running smoothly and the configuration smooth and so on, and everything could be posted properly. One thing that's important, if you're talking to people coming from the old world, this new world generates an awful lot of more documents because every single material movement, every single activity allocation is potentially kicking off a work in process calculation, and every partial delivery is potentially kicking off your variances. Whereas what would happen at period close is you would wait, gather everything, and then right at the end say, okay, apply a 10% overhead, and what's the value of the work in process here? But I still think it's a value because it gives you that transparency. I certainly work with customers who were furious that by day 3 their order had finished and they had to wait to period close to see whether they'd done a good job on that order. I'm going to skip that one because I'm running slightly out of time and I've repeated what I said. Things to be borne in mind, that we're still working on repetitive manufacturing. So if you've got a customer who's using product cost collectors, we're not finished yet. And in the engineer to order world, we've still not released yet. We've still got results analysis in place rather than the new revenue recognition. So there's still a few things to be done in the cloud environment because I want to move on to what's new. Now, this slide isn't actually new. Most of you will have seen that already. The new idea of the umbrella term universal allocation, which first actually came out in 1809, I think, with the separate apps to manage your allocation cycles, run the allocations, look at the results, and so on. What's critical for me is not just the idea of the universal allocation and the fact that everything looks nicer in that new environment, even though that's definitely what I like to talk to with customers. And I love showing the allocation flow. It's so much nicer than the old black box of the old transactions. But one of the things to be very aware of is the currencies. Universal allocation can support you in all the currencies. And what we've done in 2011 is we've enabled universal allocation for margin analysis. So you can take your marketing costs, your administration costs, and so on, and settle them and allocate them to margin analysis. Now, I want to just take a step back because I know people get confused between what's top-down distribution and what's allocation to margin analysis. And with everything now sitting in the Universal Journal, it's sometimes a little bit confusing because all the values are starting and finishing in the Universal Journal. But what we talked about in the previous release with top-down distribution was the idea that you were capturing things like insurance expenses or freight invoices at a fairly high level characteristic in COPA, a high level reporting dimension. So you were capturing them by product group, and then you were using the reference data, the sales revenues, sales deductions, whatever you thought was a meaningful way of splitting them, to move the costs from that product group and split them down to the product. But you were still effectively within the scope of margin analysis, but you were starting from a high level definition and breaking it down finer. So if you had €1,000 at the top, you were breaking it down into all the products that were assigned to that product group and potentially generating lots and lots of smaller items that rolled back up to the $1,000 for your product group. Now, as we move into allocation, an allocation is a genuine accounting document. So what an allocation does, it literally takes the costs off your marketing cost center, off your sales cost center, off your administration cost center, and it potentially produces multiple receiver assignments. So you can create a kind of waterfall here where you say, my marketing cost center, it works to provide marketing for individual products, but those products roll up to individual product groups. And you've effectively got a way of going through that tree within margin analysis and saying, I'm crediting my cost center. So if we still had €1,000 to spread, I would be crediting the $1,000 to my marketing cost center, debiting maybe only to one product group, and then debiting in addition to those many, many products. So it's a slightly different way of doing things. Where it's critical is if you've got multiple currencies. So I've had quite a lot of on-premise customers who have been desperately waiting for this because they're using 3 currencies. So if you've got the third functional currency running in addition, you really want to be looking at doing an allocation for universal allocation into margin analysis rather than taking the old approach. Something else that's new, completely new in the cloud environment, is the idea that you can do intercompany allocations now. So if you think about it in the cloud, your controlling area contains potentially all the legal entities that you have operating. And if you want, you can have a shared service cost center sitting somewhere in Europe, and you're spreading costs to the rest of Europe. As far as the allocation is concerned, all you have to do is flag it at the top level and say, I'm an intercompany allocation. So this is a special allocation type. And then the system says, actually, I don't care about the assigned company codes. I'm just going to take those costs from the shared service center that's sitting like ours in Prague and spread them to all my European subsidiaries. So in this example, we've taken costs off one cost center and assigned them. In this case, they're all in the Czech Republic, so maybe it's not the best example because it doesn't give you the idea of lots and lots of different company codes being involved. But that's the idea, that you're taking a bundle of costs from one cost center in one company code and potentially spreading them to cost centers in multiple company codes. What's important here is not just what we've done from a CO point of view, so debiting a cost center, a central cost center, and crediting lots of receiver cost centers. We're also updating the trading partners properly, which was something we had modifications to do in the on-premise world. All that's now clean. And we're updating an intercompany clearing account. What's missing still, and what we'll do going forward, is what you're often required to do legally is to apply a markup and actually do a billing function on top of this. So when Prague spreads its costs to the rest of Europe, there actually should be a pro forma invoice that says, we have an agreement with each other, and therefore I'm sending you this many costs for the services that we've provided to you. So that's something that will come later. But we've now got back to the state we had in on-premise, where if your controlling area was big enough, you could spread costs all over the world, irrespective of your company code barriers. And we've separated that off with a separate intercompany allocation type, just so you're really clear what's going on locally. So your heating costs being spread and what's potentially going on across company. Another thing we've been looking at is project costs when you're building assets under construction. And what we did initially was we said all the costs that you collected on your project, they go to one asset under construction. And our cloud customers have said, that's really, really too limited. The business example that they'll typically give is that there's actually a legal requirement to separate the costs that says what are you allowed to capitalize and what aren't you allowed to capitalize. So your tangible costs, your materials and so on, you're allowed to capitalize those as asset under construction. And if you've got all sorts of overheads and things lurking in that project as well, you're often not allowed to treat that in the same way. So you'll either move it off onto a separate asset under construction, or you'll separate it completely. So what we've got now is self-service UIs, so you can configure your investment profile, so you can do your settlement based on source. And then within that source, you can say which asset class would you like to assign to. So in this simple example, we've got two asset classes that are, so the same project, we're configuring the cost group. So this source assignment basically says, am I tangible, am I sort of material costs or such like, or am I intangible? And then for those two separate buckets, you can go different ways and update different asset classes if you want to. And of course, if within those whole tangible costs, you then want to say, actually write off 10% to cost center, you can do that as well within your distribution rule. So the key thing to do there is, of course, to identify those projects where it matters, where you want this separate investment profile, which says you can split by sources structure. And if you do that, then you've got to start defining your buckets of costs to say, which ones do I consider tangible and which ones do I consider intangible? And what's maybe important here is also to say what's not there. What's still not there is a line item settlement. So those of you who know on-premise will know that in an extreme case, you can take every single line item that's collected on a project, and you can say line by line, I'd like to settle you to asset, I'd like to settle you to cost center, I'd like to settle you to a different asset. We haven't got that, but the source assignment goes a fair way if you can group your accounts up front and say, this is what I'd like to do with them from a settlement perspective. So it's a step in that direction to giving you more transparency into your project costs and more transparency into what you're settling, what you're capitalizing. So I'd now like to move on to product costing. We've had a lot of questions recently about freight costs. If you look carefully in the new cost component structure, you'll see we've got a new element here, freight and landed costs. And there's actually two ways you can fill that freight cost at the moment. The one is manually, so you can use these additive costs, and that really literally allows you to say, my freight costs come in under account 654000, and I've got $100, and I'd just like to manually create a line that says, these are my $100 of freight costs, and then they'll be included in your cost estimate. And here you see everything showing up as freight costs, but in fact, the idea is you would roll those freight costs up and see them as part of your cost component structure throughout the cost estimate. The other approach, if you can derive your freight costs from your purchasing conditions, we've got a self-service UI where you can say, this is my origin group of freights. So any material costs that are coming in, you're breaking down and saying this part is freight and this part is raw material. So the cost of the material that you've bought itself. And again, we're feeding those into cost component 104. So as I said on the previous scene, we've got a new freight element in the cost component structure. We've got a new origin group. And the idea is that you assign that as part of your cost component assignment at account level. Now, at the moment, we've been fairly limited. We've just said, look, here's one cost component for freight. any freight conditions that you might have in your purchasing info record, these are going to flow into freight. But if you want a more granular view, I certainly had customers in the past who've separated out insurance, duty, and so on. Then you can look at the individual condition types and create more origin groups and break that out more to have more detail in your cost component structure if you feel that's useful for you. Another thing we finally started to do, a lot of people have been asking us about actual costing results. A lot of our Chinese customers are up in arms because they want greater transparency into the result of actual costing. And so what you see here is the very first delivery. It's basically a list of all the materials that were costed in period 7 in this example, and then it shows the standard price and the result of my actual costing and the unit. And this is what our customers need to provide to their auditors in China. And obviously then going forward, we'll be enhancing this to include things like the cost component split and basically more detail. But it's nice that we've got our first delivery in 2111. Moving into margin analysis, one of the things we have a lot of confusion about is the cost component split. Just to remind you what it is, when the goods go into stock, you'll typically have 10 pieces at $100. So your total value is $1,000. And what the cost component split does, it says there's a cost estimate behind this $100 that says $50 is material cost, $25 is activity cost, $25 is overhead. And it takes that $1,000 and it breaks those costs out into weighted according to your product costs and gives you that split, that detail. And what we've done with this new managed cost of goods sold split application is to give you a view that says, okay, which of the cost of goods sold postings have I got initially? So show me those original 10 pieces at $100 postings, and then show me those COGS split journal entries where I've taken it and tried to split it. And of course, we've also got an error component in there that says, you know, you're working with parallel accounting here, but actually you've only got a cost estimate in your leading valuation, but not in the other. So I couldn't split according to the other valuation, and showing you what really went wrong. And the other thing, which of course is terribly useful, it actually explains what the system did, which certainly if you're testing, if you're trying to understand if things are going as you would expect, we can then see during that, for each item that was split, what was the configuration that I used, which standard cost estimate was I trying to find, was it the costing variant that I'd expect, was it the period that I'd expect, and then you see those COGS postings. So you see the inputs, you see the direct material, the personnel time, the machine time, the setup time, and how that was used, those proportions to generate the values that you see in the cost split in your final accounts. So very useful tool, certainly in testing, and also hopefully will save us a lot of error messages where people just say it's doing something, but I don't know what, or it's not finding a cost estimate and I don't know why. Another nice little addition, most of us know the product profitability report if you've been working with margin analysis, and previously it stopped at the contribution margin with the cost of goods sold. And now we've expanded that block to say, if I've got input price differences, quantity differences, and so on, the things I talked about when I was talking about scope item 3F0 for the product cost posting, those things are all being posted as a SLALI type. So you can see here the technical settings. Normally you don't need to know that, but we use those technical settings in this report now. So there's now a new report. The top half is product profitability as you know it, based on the semantic tags. And the bottom part of that report now breaks out the production variances and shows you the detail behind it. So the input variances, quantity variances, and so on for those orders. And in this example, I've really only shown the variances, but of course, normally in a given period, you would have also sold something. You would have some revenue showing up there. You would have some cost of goods sold there. You wouldn't just have production with a huge heap of variances. But my focus was on showing what was behind it. And here you can see that I've got one single variance account and being broken out by SLALI type, because we get quite a lot of VCRs saying, you know, I'd like it like in on-premise, where I take that one account and break it out into lots of different accounts. So in the cloud, we're not doing that. We've still got the one common account, but being broken out into the variance categories. The other thing that we've done, also think is quite important, is around the product hierarchies. Now, if you've been watching sales, if you've been watching some of the other logistics applications, this product hierarchy you probably explored there, it's actually not part of a finance role. It's delivered with the product manager role, specialist role. But the idea is that you group your products and you say, you know, at the bottom level, you know, I'm making yogurt, I'm making milk, I'm making whatever your products are. And then you try to group them into dairy and then into sort of various levels, or in this example, we've got some hydraulic fittings. How you group them entirely up to you. The finance people here will already be looking at this structure and saying, well, it looks very familiar. It's just like a global accounting hierarchy, just like the way I build my financial statement versions and my cost center groups and my profit center groups. And that's exactly right. You've inherited the ability to have a draft version. You've inherited the ability to have a time dependency. What's important is this hierarchy is used in logistics as well. So your sales pricing and so on can also be driven off this structure. But what I wanted to focus on was in any of the market segment reports, you've always got the product sold in there. So in this example, we're working with hot drinks. If you imagine in there, I got tea, coffee, whatever, the individual things that I've sold. And it's a generic function within that any of those reports that you can just pull in the hierarchy. So the same way that you can pull in a hierarchy for the cost center groups or pull in a hierarchy for the account groups, you can pull in that product hierarchy. And then you can see the information, not just for the individual products that you've sold, but also for the various groups that you've defined above that. So you can break out your revenue and explore it depending on your different groups. And I think that's quite powerful, but it's also something that a lot of people just don't seem to realize is there, because they've been sending us complaints and saying, you know, what's happened to the old world? Because those of you who are coming from a classic profitability analysis world will be a little bit suspicious about the hierarchies being separate. That's what you did in profit center accounting, for example. In the on-premise world, you always wrote those nodes into your universal journal. And so a lot of people are a little bit confused with this new approach. So I explore it here just because you'll often find people asking questions based on what they knew before, rather than the new approach. And I promised Birgit that I would talk about internal orders. Really, really important. Officially, they're not there in the public cloud scope. I think they were deprecated about 3 years ago, but we've still got about 10 customers using them. And we've still got people trying to use them to fix process gaps, because that's maybe what they've done in the on-premise world. And this causes us as SAP all sorts of nightmares, because as you can imagine, as we went into universal parallel accounting, we'd worked on project settlement, but internal order settlement didn't exist for us. So you hit problems. I get however, the same questions from the on-premise world and the private cloud world, with people saying, oh, I've heard internal orders are going and what should I do? What should I do? So there is a note that explains where we are in the on-premise world. Basically, we're leaving them in place there. There's a new manage internal orders Fury app coming there, because we've got a few customers that have said, you know, your Fury story is no good. It doesn't support one of our most common objects. So they're still there. They still do what they always did, but there's not a lot of development around the internal order yet. But really, for the cloud scope, please don't start using them now. If you're doing some kind of new implementation, think properly rather than just say, I'm going to use the solution that I've always used in on-premise, because it will hit you every time we add new functionality, because we're not enabling things like event-based revenue recognition or the new universal parallel accounting in this area. Yeah, and that about brings me to the end, with about 5 minutes left over for questions and answers. I see a few things have been going on in the chat. I'll just have a look in. So Juan's asked, does the template allocation work with event-based automatically too? Simple answer, Juan, no, it doesn't yet. It's something that we're looking at in terms of how we can handle those simple template things that just say, you know, at the end of every production order, please do a quality check. But we haven't done that yet in the cloud. In fact, template allocation isn't in the cloud at all. And if you're thinking on-premise, it's one of the things that we're going to have to finish when we do the delivery on-premise, to allow the customers that do use template allocation to make an informed decision. So Juan asks also, why did you decide to restrict the overhead allocation to margin analysis only when costing-based is not active in the operating concern? Well, you didn't introduce this restriction to universal allocation in top-down distribution. The answer there is universal allocation just doesn't know anything about the old costing-based tables. It's only working under the Universal Journal, so it's a technical reason rather than a business reason. Anders asks for intercompany allocation when we would get billing. We're hoping to have that next year. Obviously, always difficult to see. And then Anders asks, what should we do in terms of recommendations to handle legally binding VAT markup, etc., until we get billing? I mean, we've never had this in CO. So what customers used to do in the past was they actually used to use the reconciliation ledger to say, what were the partner relationships, who's charged what to whom, and then they would create a manual billing on top of that. Obviously, that's not a helpful answer in S4HANA because we've got rid of the reconciliation ledger, but you've got to find the same basic idea where you have some way in reporting using one of the standard reports to say who were the partners in this relationship. So going back to my shared service example, who did Prague actually send costs to? Because you can imagine there could be many allocation cycles, debiting and crediting company codes, and use those partner relationships to then say who's charged what to whom, and then to do a manual billing on top of that. So I think we've had both of those two. And we've had Juan's question. Let me just scroll down. So Juan asks, how does the ML closing process change with universal parallel accounting? Any simplification? So the big change there is that you've got the ledger in every costing run. So you always create a costing run with reference to a ledger. And obviously, if you're doing actual costing in both your ledgers, then you're going to have to run actual costing twice, once in your leading ledger and once in your associated ledger. Anders says, when will we get a better looking product profitability app in Fiori or embedded SAC since the good looking app has been deprecated? Answer there, we're working on one. I can't actually remember when we plan to get it out. So if you want to send me a mail, I'll let you know that later. There is one in the works though. And then Juan says, what about virtual modeling of COPA characteristics without ActDocker, but via embedded analytics association? When a part of the product hierarchy is it recommended? Really good question, Juan. Hard to answer in 2 minutes flat. The challenge is the join. So obviously, when you're doing a join to pull your product hierarchy in, if you've got a very, very big structure, that's quite an expensive join because for every product sold, you've got to go and look which hierarchy does it belong to and which node would you like to show. But it very much can be done. And it's always a balancing act between, if you try and write a node into the Universal Journal, then you'll typically come back later and say, yeah, but I didn't mean silver. I'd like to upgrade them to gold. And you have to then do a realignment to move all those assignments around. If your hierarchy is sifting separately, you just change the hierarchy. So it's easier up front in the sense that you've got more flexibility. But at the runtime of the hierarchy, at the runtime of the report, you have to evaluate that hierarchy and say which product sold belongs to which node, which obviously takes time. So in principle, you could do it for any element in the Universal Journal. And you see that in consolidation, that there's quite a lot of hierarchies crept in there in the group reporting table. In the others, it can be done if you wanted to model a customer hierarchy like that, or put a hierarchy on top of your company codes or whatever. Technically, nobody will stop you, but you just have to be careful at runtime that you're adding performance to your hierarchy, to your report, because it's got to go out and read the hierarchy nodes. And I think only it's 9:50. I'm going to drop now.
Yeah, that was perfect timing. Thank you so much, Janet.
Actually, there were 2 more questions.
You're
Would the
really
limit
the pro.
of 60 COPA characteristics be extended? Yes, but not yet. And I think the asset question I'll answer later. Okay, all right. Thanks, Ali.
Hey, thanks, Janet, for coming in. Thank you so much. Yeah, and that was perfect timing. Let me share the agenda quickly. Okay, so where are we now? So it's 9:55, and the next topic on the agenda will be an update in the space of finance operation, specifically talking about credit management, including a small demo on the topic. And I'm very happy to welcome Victor today here from the Finance Operations Development to give us this update on credit management. So Victor, are you in the call?
Yes, I am. Can you hear me?
Perfect. Yes, I can hear you. And yeah, feel free to share your screen and to show the presentation then from your computer. Yes, we have, I think, planned for half an hour, including a few minutes questions. So, so Victor, up to you.
Turn.
Yes,
Thank you.
Thank you so much.
Hello, everybody. My name is Victor Kinsvater. I am the PO for SAP Receivables Management. And today I would like to demo you the new features and the theories of what we did and shipped with the current on-premise release 2021 in the area of SAP Credit Management. So maybe I should go to the presentation mode. Yeah. So we mainly have, or I will talk today mainly about 3 Fiori apps in this area. I will start basically with the second bullet point of that of that slide. This is the Fiori app managed credit accounts, where we bring all the data, the process related data together to display it to credit manager. And then I will follow with the managed documented credit decisions Fiori app, which we also revised on the one hand, but also enhanced on the other hand with new functions and capabilities. And will end my presentation with the enhanced work list for credit manager based on the SAP Analytics Cloud. The first 2 points, the first 2 parts, so the Fiori app managed credit accounts and the managed documented credit decisions, I will demo you in a system, and the last one I will do via a video recorded. So just a short overview on what is in there. So we are working now with Fiori apps. This is a general approach we have to provide Fiori apps, which can then be accessed from the Fiori Launchpad, completely web-based, and both types of Fiori apps can be displayed operational as well as analytical Fiori apps. And of course, they can be extended each time you need it. So the first one, the Fiori app I will start with, as said, the managed credit accounts. Everyone who is working with SAP Credit Management, I think knows that the classic view, which was based on the SAP Business Partner in the role SAP Credit Management, that was the credit account, or the credit account was represented by the SAP Business Partner in that role. And this view is now replaced by this new Fiori app managed credit accounts. Yeah? How it looks like, I will show you in the system demo with all the capabilities we have there. And as said, it will be followed by the managed documented credit decision. So whenever you have created your credit account, you have completed the data, you have scored the customer and assigned a risk class to the customer, you have decided about the credit limits, etc. You start to use this data in the process integration. And the most important part of that process integration, or the decisions taken there from the credit risk management point of view, are the decision related to probably blocked documents or credit block documents, which were blocked because of a negative credit check. And these decisions are taken using the documented credit decision object. It was already there in the GUI version. It is also a classic object from that point of view. Now it is replaced by a new Fiori app. So let's go to the system now and see how the functions or Fiori apps look like and how they work. I'm here in the Fiori Launchpad already, and I start with the first app on our list, which is the Managed Credit Accounts. It brings you, so clicking on that tile, it brings you to a list report where you can search for credit accounts created, probably credit accounts in your responsibility. You have various searching parameters there. You can adapt the filters and use further parameters for your search. Yeah. And of course, you can, as in the other Fiori apps as well, you can store the search if you want to use the filter criteria more often than just once. You can save this as a tile, yeah, and then have direct access to the search variant basically created. Yeah. How does the list look like? The list is basically, yeah. So the search results are displayed in a list. Yeah, partially the accounts are not yet completed. So the risk class, for instance, in this case is missing. In this case, the credit account is obviously complete. You can enhance this list as well by adding another fields. Yeah, basically, so the fields which contain the general credit information or the general customer information, you can enhance and adjust it also as well. So let us open a certain business partner I have prepared for this presentation, which would be the SAP SE. Search for it, and then open the business partner. So what we did to replace, let's see. So the Fiori app manage credit accounts. We start with the credit profile as before. The difference to the classic view, which was based on the SAP Business Partner, is that we have all the most important information together on the same screen. You just need to scroll down, or you jump from area to area using these sections, these facets. Yeah. On the header data, we have the most important information like the business partner number, the business partner address, and the business partner name, as well as the global credit data like the risk class assigned to the business partner, as well as the credit, the process relevant data, the credit decisions taken based on the main segment level. So what you see here is the credit limit on the main segment, the exposure on the main segment, and the utilization on the main segment. Then we display on the header data the score validity days, which are based on the score valid to date. And we have some embedded analytics here to display the current situation with the business partners. So in this case, it is the score evolution. So when did the score change, on which date, what was the value? Same for the credit limit. So the credit limit trend or the credit limit evolution on the main segment data or on this main segment level, basically, as well as the aging grid, which is built based on the commitment data we receive from FI. So what is overdue, what is not due yet. And then we have the different facets where we display the data depending on where the data is basically stored or where the data belongs to. You have an overview on the generic information on the business partner, like the score, like the risk class, like the calculated risk class. So to give the credit controller or the credit analyst the full view of the customer or of the credit relevant data. One big difference to the classic view of the SAP of the credit account in the SAP GUI, where it was the SAP Business Partner, we populate the most important information from the segments already on that screen, so that you or the credit control does not need to go to or to jump to a complete other view without seeing anymore the generic data or the general data of the credit account. And of course, you can change all this information displayed here, so you can do quick decisions per segment as well from the credit profile in this case. Yeah. What's else on that screen? We have still the external ratings. If the SAP S/4HANA Cloud for Credit Integration is connected to that system, you can jump from here to the cloud and import reports or view reports imported from the external agencies. You can create notes here as before, so this did not change. And you have, in addition, and this was not the case for the classic credits account, you have an overview of the documents blocked, basically. So you can access right from here, from the credit account, the documented credit decisions, which will be the second part of my presentation, and take your decisions here, either in mass, marking several entries, and then release or recheck them, as well as jump from here directly to the documented credit decision and do the needed work there. Same for the credit limit request. As of now, it is still empty. We are just outlook or information on that point. We are working on that objects as well to revise and to enhance the process in the area of the credit limit request as well. And then you have an overview, as usual, about the insurances, about the collaterals, etc. pp. And at the end, you have the possibility to link attachments or upload attachments to the customer account on the credit profile level. So things which should be accessible from the credit profile. To get more information, you can jump directly from here to the credit segments and see the additional data there. So what's available on the credit segment. So all the payment behavior key figures, all the links to the credit analysts, same documents with credit blocks, so access to the documented credit decisions. You can create notes. This is quite new here in this managed credit accounts. Fiori app was not possible in the SAP GUI to create notes on the segment level. And as well as on the credit profile, we have here the integration with, or some embedded analytics here on that level as well. Well, the next part of my presentation would be the second Fiori app listed on the PowerPoint slides. The Fiori app managed documented credit decisions. So in the process, when the customer is completed, or when the credit account is completed, the customer is rated, he has a risk class, he has a credit limit, you start the process integration. The documents created for that customer, if per configuration process relevant, will be credit checked in the credit management. And depending on the check results, a documented credit decision will be created. This is the case in the process integration when the document gets blocked due to the credit or to the negative check results in the credit check. Then the system automatically creates a documented credit decision, and the access happens via this Fiori app. This is one of the ways. The other you have already seen. You can access the documented credit decisions from the master data as well, from the credit account directly. So as well as for the managed credit accounts Fiori apps, you start with a list report where you can specify what you like to see. As well, you can adapt the filters, add other attributes and parameters to the selection screen, and the output list is basically a list of documents blocked, or of the rather of the documented credit decisions, which represents that blocked documents. As well, further fields can be added to specify or to support your work. Let me show you something. So hide details, not show details. I added a new field just to show you what we support, or what types of documents we support. We, of course, support, as in the classic solution, the sales orders and the sales deliveries part, and this is new. We also support the service orders created in the CRM system. So this integration is also done. You can create service orders in the CRM. They will be credit checked if connected. And the same will happen. Documented credit decisions will be created. How does such a documented credit decision look like? Let us use the first one to shortly go through it. As well, we have on the header data the most important information from the credit account, like the risk class, like the credit limit in that certain credit segment. where the sales document has been checked and blocked. The utilization, we have some embedded analytics like scoring evaluation or score evaluation, the credit limit changes and the aging rate. Additional information we have from SAP Collections Management, the number of broken promises to pay. We display here as well. All this is the important information which supports the credit analyst or the credit manager to take a decision related to this certain document, document with a credit block. In this case, it is a service order from CRM. You can use this navigation to directly jump to this object to display the CRM related or the document related information to get some further information which can support your decision. Yeah. Go back and exactly. Then the credit manager would, to prepare the decision to decide how it should be proceeded. You can check the credit check results. So the result, or the results per credit check step are displayed here as a field. Yeah, in this case, the reason to block the document was that the credit limit check was not successful. On the same screen, you see another enhancement we did in the area of credit checks. We now check for the credit limit validity. So this is what customer often ask for or ask why we don't do it in the standard. We, when the credit limits are decided or defined, calculated using a formula, the system also determines the valid due date according to the configuration, to the customizing. And it could happen in the past that the credit limit, the date is exceeded and nothing happens in the system integration. And now we change, so it is up to the customer basically to decide if this additional credit check step should be added to the check rule. And in this case, we would block the documents or set the result of a credit check to negative if the date is in the past. So basically the information is displayed and the decision can be taken using this function. Function buttons basically either recheck or release the sales, so talk about the CRM document, the contract in this case. Back to the list of the documented credit decision, let me open one from SD. So the process integration with sales and distribution looks very similar. Of course, it is the same object, still a different customer. In this case, we have, again, on the header data, the most important information. The credit manager would check why the sales document in this case has been blocked. Same happened. We have the static credit limit check, which failed. In addition, the overdue open items check failed. The validity date was obviously okay. In addition, you can display, or the credit manager can display, of course, the full log of the credit check. So what happened during the credit check, all per check step, basically. And here we have one of the most important enhancements, basically in this area. We have built or enabled, implemented a new approval hierarchy for these credit decisions. We allow a multi-level approval hierarchies. Basically, it was something similar was there in the classic view as well, where we provided the possibility to have a look by up to 4 approvers. But the approver determination or the user determination was manual in that area. What we did here, we have implemented a complete new approach where approval hierarchies can be defined before, like a configuration. It is a current settings. It is a BRF plus based solution. Where you can say, depending on the parameters you choose, I will show you how it looks like. In the next step, the number of the approval levels, and if the approver shall be a certain user or if it shall be rather a group of users. Yeah, and then depending on the approval step, in this case, I'm not responsible for that documented credit decision. That's why I can only run a recheck, but I cannot decide about it because I'm not Felix. Yeah. Yeah, but then as the next, it would go to the group, and if I am the member of the group, I could decide about this documented credit decision as well. Yeah. How does the definition of that approval hierarchies look like? We have a new app, Manage Credit Management Rules. Let's go to it. It is basically to display and to maintain these BRF plus tables. For the time being, we have the possibility to create one rule, like this is the approval hierarchy. This is our area I would like to create a rule for. And this area C, there are 3 approval hierarchies already defined. That one was used in the document unit, in the documented credit decision you have seen. As you can see, the key parameters, you can use it. You can use here to define approval hierarchies, credit segment, risk class, the credit amount, and the document type. This is quite new as well. So now with this new solution, you can define different approval hierarchies for sales orders, for deliveries, and for the service documents from CRM. So you can say 4 level approval for the sales orders, but just 1 level for the deliveries because it already has been checked when doing this sales order approval. And then up to 5 levels are possible. This is what we defined, and this is either a user or it is a group per level. So this is all you define in the approval hierarchy. And then based on that settings, the system chooses the right approval hierarchy when the document is going to be created, the object, the documented credit decision. Yeah. So how are the credit managers informed about the documented credit decisions created? They are probably responsible for. We populate or we send a notification. So whenever a user should be active in such a documented credit decision, whenever he becomes responsible for it, we create a notification which can be called from this area, and from that notifications the user can jump directly to the documented credit decision in question and take the decision. Yeah. Might last a bit. Now it opens, and here we go. Now I am in charge basically, and I can do the decision in the terms of release. If I check the approval hierarchy, I'm obviously a member of the group. Yeah, so I can do my decision, say release after I have checking all the talked to customer. Okay, agreed, maybe something, agreed additional promises to pay, etc. And this is then my decision, and then it goes. So the information is sent to the sales and distribution, and then if successful, it comes back and the documented credit decision is closed, and I can go to the next one and decide about it. Yeah. And the last part, I think I'm a bit over the time already. The last part is the analytics and the work list. So what we have created SAC story where we combined different analytics which are displayed in pages. We'll see it on the screen. So different pages are available, like here. So to display the credit limit utilization, various aspects or dimensions from which you check the credit relevant data, like credit limit utilization, the overview on the credit exposure, display accounts in focus, like accounts with a special attention flags or blocked accounts, display the blocked sales documents or the basically documented credit decisions as shown just before. And yeah, you have different dimensions from which you can use to have a certain view on the credit relevant data, like display the credit information, the credit limit and the exposures from for a certain segment. You can filter the data displayed, so show me only those customers which have the risk class B or C. You can specify or limit further filter, clicking on a bar. The table below the bars is then basically filtered and sorted for what you would like to see in this class. It is the risk class C only. And one of the most interesting parts is this accounts with tasks. This presentation goes through the single screens. Accounts with task, like a kind of a work list for the credit analyst. So what needs to be done today? So documented credit decisions about you need to decide the credit limit request to decide about, and the resubmissions which were displayed there. And from here, and this is the interesting point, or the function which makes it to a work list, is the possibility to jump directly to the credit account. Yeah, so you run your analytics, you see there is a customer, where documented credit decisions are created for, you need to decide about, or there is an open credit limit request, etc. You go to the credit account, you check the data there. Yeah, you maybe adjust the information if requested, like check the credit account, etc. And then this helps you to do the decisions immediately from this credit account. Then you go back to your analytics and go to the next customer. So that's basically it. I think I'm a bit over the time, and now I'm open basically for questions.
I think that was perfect timing because we don't have too many questions.
Okay.
Here's a few questions in the chat. Here, the first question is a very general question. Is there any machine learning model available for credit management in general? I think that's a question apart.
Yeah, we are working on that. Not yet. Yeah, this is basically a future development, or it's on the roadmap, but not yet shipped.
Okay. And the second question is more a question in the space of collection management. I'm not sure if you're familiar with that. In collection management, we can type in free text to track the customer follow-up. What customer has given feedback? Is there a report to show all those customer texts and the feedback? I think that's more related to dispute and collection management apps, right?
Yeah, it is. Yeah. I'm trying trying to understand in collections management. Can we type in free text to track the customer?
Capturing customer interaction feedback, as far as I remember, right? You have in the collection process and in the dispute resolution process, I think, if I remember right, there are multiple points to track. On the one hand, the customer interaction, the activity log in the new apps, and also the written feedback. I think these dispute and collection management apps were new last year already. and I think they capture a good report. And
yeah, there are various
yeah.
options to
Yeah.
type in such feedback. Yeah,
Right.
and the questions which maybe we deliver sometimes a bit too much of such capabilities, right? You can do it here and you can do it there. Yeah, probably we should limit it a little bit to make it more straightforward. Yeah. But basically, for the text, if you mean the text, there is no report to display the texts. You know, you can report about the objects where such texts are created, but not the text itself.
I think, if I remember right, there were some comment fields.
The comment field, which you item based, comment. Yes. Yeah. This is possible. Yeah. And I think the last I see it are those new apps available in the basic credit management or advanced one. At least the managed credit account. This is a basic for credit management, so this is basic credit management as well. And the documented credit decision, this is the only possibility to decide about, to do the document-based credit decisions. It is available in the basic version as well. SAC, I think it's not. I think it's only for advanced credit management. Just because I'm not sure about it.
Yeah, I think embedded analytics usually included. Yeah.
The point is that in the SAC, also what you have shown before, there are objects included which are not part of which cannot be used in the basic credit management, like credit limit request. Yeah, and this is the point.
Okay.
Yeah, but the credit account itself and the documented credit decision are available in both versions of that. Yeah, basic and advanced. Yeah.
Okay. I don't see more questions. Hey, Victor, thanks for giving us an overview into the new usability of credit management, into the new apps, into the integration, into the approval hierarchies, which are very good, the notifications and the embedded analytics. I think that's a lot in credit management to tell. It was a great overview, great demos, and thanks for your time. Yeah, see you next time.
You're welcome. Thank you.
Yeah, thank you. All right, so I think we are coming to the agenda of the last part of this first block. Let me share the agenda. Yeah, now Donatella and me will talk about an update in accounting and financial close. With 3 topics or 4 topics we want to talk about. Maybe I start with topics where I'm giving the update. Donatella, are you also dialed in the meantime?
I'm in.
Great. Hello and welcome. Yeah, let me introduce you, Donatella. So Donatella is the CPO for accounting and financial close. And yeah, we are doing this presentation, this update on accounting and financial close together right now. Pull over the presentation and the agenda and switch to the presentation. So, hope you can see my screen. Okay, yes. Great. Perfect. Yeah, we do have 4 topics on the agenda. I'll cover the first 2 topics and Donatella the 3rd and 4th topic here. Those one who attended the show and tell session or other sessions like the canapé sessions might be aware of some of the topics here already. So I will jump very quickly through the 2108 update for purchase order deferrals, as well as the 2108 update for the intelligent intercompany reconciliation. It's a repeat, and I will give you some more information and links if you need. If you missed these earlier sessions, then you can have the full detail by looking at these sessions again. They are available as recordings. And then Donatella, and this will be the focus of today, will look into the new functionality of discounting of long-term assets and liabilities and the status update for the functional currency and the availability of the functional currency in multiple apps. Yeah, let me start with the purchase order deferrals. You might know that in SAP S/4HANA Cloud, we already have the accruals engine for purchase order accruals available for a couple of releases. Now the point was, yeah, that it did not support so far the deferred expenses, but only accrued expenses. So the use case accrued that the invoice comes later, but some expenses occur earlier is already supported. What is new now is the deferred expense. And this complements the functionality of the accruals engine and can play together with the functionality available in the accruals engine. Yeah, and overcomes the need for doing accruals and deferrals for expenses manually. Yeah, so exporting the stuff into Excel, doing all these calculations manually, and then manually uploading the results to SAP S/4HANA Cloud is a bit, yeah, let's say error prone and slow. Therefore, this accruals engine is automating accruals and deferrals postings. Yeah, and with the deferred expense, we now have completed some functionality in the space of purchase order accruals. What is a deferred expense? Just for you to remember, it's an asset actually where the invoice or payment is made or has been made, but the goods and services are expected in the future periods, like depicted here. And when an expense is consumed, it will move then from the balance sheet to the expense of the income statement. And this could happen for expense, prepaid expenses, and invoices posted in advance. And in case a service or consumable product is received in advance, where the same will be consumed in a future period. So this is the use case. Yeah, and as mentioned, up to 2108, the accruals management component for purchase order accruals could only automate the accrued expenses. And from now on, from 2108, the deferred expense calculation and posting could also be automated. The nice thing is that since they are sharing the same leading object with the integration, the purchase order, they can also play together. Yeah. So deferred and accrued expense can play together. For deferred expenses without an PO here, this is something we have planned in a new solution later on. So at the moment, it completes the integration here. From the accruals engine replicates the orders and creates accrual objects here. And based on these accrual objects, then it automatically posts the deferrals accruals into the journal. Yeah, what else is important here? Automatically calculate, provide principle. Yeah, and there, of course, are a couple of reports to support this process here within the accruals engine, but also to review the journal entries. Just a quick recap of the process. I give you a process example here. So in this process example here, we can see a process of a consumable service here, of an insurance with a linear use from April to September. For that, the purchaser creates a purchase order. The purchase order items are replicated, the information is replicated into accruals management, where the GL accountant can review the accruals objects here. And then the accruals are automatically posted then for April, May, June through month-end closing jobs. And then these accruals can be reviewed by the GL accountant. Then in this example here, an invoice comes in the mid of the periods in July. And he again can check, the GL accountant then can check again the accruals for this purchase order here, schedule the accruals jobs, and check the results in the GL line item app here. So this more or less are the roles and the apps involved in a combined process here. So combined means at the beginning of the periods here, April, May, June, accruals are being posted, and then from July on, when the invoice comes in, the remaining deferrals will be posted. Let's have a look at the posting schemes for this example here. So as mentioned, for the first 3 months, the accruals postings, the periodic accruals postings are being done here, 100 per period, linearity of the consumption assumed. Then they are posted, of course, as costs. Then the invoice comes in, 600 expenses to accounts payable. And then there, the system creates automatically an initial deferral posting for the recognition of the deferrals of 300 of the remaining 300, including the correction here on the cost side. Then the deferrals released for the first month. So the first periodic posting for the month July is being performed, 100, consumed as costs. And the correction posting here for the accrual side here is done. So it's debited against the costs here of the cost account. Yeah, and from here, then the periodic deferral postings of the remaining 200 for August and September are being performed, so that at the end of the day, the deferral, the total balance of the deferral disappears from the balance sheet. That's the whole magic behind of it. If you are interested in a demo, please look into the show and tell, and also here at a video on sub.com, which we have recorded. Here you can see the detailed use of the app. And I think there is an canapé session planned for end of October 27th, if I'm not wrong, on this topic solely. Also covered already in a very detailed session is the intelligent intercompany reconciliation. Therefore, I'm also quite quickly go through this topic here. So this intercompany reconciliation, this intercompany processing can be a bottleneck at month end. You cannot create your group level financial statements if the intercompany transactions have not been yet matched, reconciled, and eliminated. And the challenges are related to, firstly, the fact that this is a high volume process. Often companies have 10,000s of AR and AP documents that need to be matched. And secondly, if there are differences, current translations, for example, the amounts might not be exactly equal, and it can be difficult to figure out which documents match. And if as mentioned, if the intercompany cannot be done in time, it can lead to a delay in the creation of your period and financial statements. And it is important to ensure the intercompany matching, reconciliation, and eliminations have been performed correctly, and that the process is completely auditable. Yeah, and with this SAP S/4HANA intercompany matching and reconciliation available since, I think, 2 years, SAP has made improvements in document matching, for example, by allowing business users to define matching rules. So it has a strong rules engine. But there might be residual things that cannot be matched automatically by the matching rules. And therefore, this new service, the SAP S/4HANA Cloud for Intelligent Intercompany Reconciliation, adds the machine learning step after the rule-based approach is taken. And the machine learning model runs on the SAP Business Technology Platform, and the data flows from SAP S/4HANA Cloud to the PTP service takes place seamlessly on the PTP and delivers back the matchings based on the machine learning model called inference. So there's no change for the business user. They simply will see a higher rate of matching because of machine learning. And for the technical user in charge of the training of the data, there is some initial effort for training the data and there for the quarterly updates if necessary. So just let's turn into the process view here quickly. So the business expert starts by creating AR and AP postings, which are very often part of an integrated order to cash and procure process. And then the intercompany accountant triggers the matching, and the rule-based matching already will take place immediately. This matches already automates already a high volume matching, and then the residual items which could not be matched then can be matched by the machine learning here. And then the intercompany accountant has the chance to review and correct the matchings, which workflow can send back to the business users then for review as well. Yeah, and this matching, that's important, can happen during the month to take pressure off the period and a means of continuous accounting. Yeah, and then these reason codes can also be verified and approved. And in the future, that's roadmap, machine learning can also assign a reason code for the exceptions here. Yeah, and finally, when the intercompany accounts are done, they close the reconciliation. This then is available also as a PDF to be downloaded, this report, and disclose the trigger for the elimination activities in the consolidation process. Yeah, and usually the group accountants like to keep an eye on the reconciliation status. That's what they are looking for in the data preparation status monitor here at the box. At the top. Yeah. So how does this machine learning training work here? In step one, you need to build up a historical data set. How? By simply using ICMR. So every match that is made, is it rule-based or manual, becomes part of your historical data. And then you need so SAP, based on our current experiences, recommend at least 2 to 3 periods and 10 to 30K lines of historical data. Yeah, once the system then is trained, the user sends the historical data to the HANA, to the SAP S/4HANA Cloud for Intelligent Intercompany Reconciliation for training. This can take 6 to 12 hours. And you can then see the model strength and decide if you want to accept the so-called inference, the learned model here. And the data then is deleted after the training. Yeah, and in step 3, you use ICMR as usual. You can schedule the jobs to run periodically, or you can start the machine learning when you're doing the matching in the Fiori app. The rule-based matching takes place, and then, as mentioned before, the ML service is triggered. And based on the changes of your data, you can, that's an optional step, retrain your model periodically to make sure that all of the latest trends are picked up in the model. Yeah, and also here, that summarizes a bit the ICMR, intelligent ICMR. If you need more information here, more technical information, I put together some information, for instance, a nice blog from my colleague Spotty here, including some micro learnings. The online help is very good. Here are the scope items. Here's a note. And also a canapé session is available that took place already for the partners, where you can get much more details in 1.5 hours from Ying Chi. Okay, that's it for my part. Hand over to Donatella for discounting of long-term assets and liabilities. Donatella, would you like to share your screen?
Yes, I will do that. Thanks, Uli. So this is share. Can you see my screen?
Yes, we can.
Okay, it should be in presentation mode now.
Yes.
All right. So thanks, and yeah, welcome also from my side. I will give you a short update first on the functionality of discounting and then on the topic of functional currency. So if we look at discounting, what is it about? First of all, we need to see it in the context of the advanced valuations, which we have developed and already delivered in S4HANA Cloud. And basically, so we did that by starting with the advanced foreign currency valuation, then we delivered the credit risk-based impairment. We have already delivered the reclassification, so the dynamic reclassification, and we will deliver soon the posting of the balance sheet reclassification. But in the meantime, in the release 2108, we have delivered functionality to post the so-called discounting of long-term assets and liabilities. And what is it about? First of all, I would like to give you some details about the legal requirements behind this functionality. So here we have 3 standards, the IFRS 9, the 15, and the IAS 37, which have more or less the same requirement for different types of processes. So the first one is about long-term payables and receivables. The second one is about long-term contracts, and IAS 37 is about discounting of provisions. So our functionality that I will be talking about concentrates on the requirements around the long-term payables and receivables, so the IFRS 9. But later on, we will also enhance it to cover also the provisions. IFRS 15 is handled by the EBRR functionality in S4HANA Cloud. And so what is the basis of this requirement? The basis is that in a certain kind of processes where in the process what is called financing component can be identified, you need to take into account the time value of money. And to do that, you need to apply a discount rate to the amount that you have already recognized in your posting, so like a revenue. And you need to reflect in your balance sheet and income statement this separate financing component. So this is done by calculating the net present value of the transaction that was already posted, and then through a series of postings that are done on a monthly basis through our discounting job. So basically, how does the process looks like? So here we can briefly go through the example. There is a company which has a contract with the customer, and so the good is transferred to the customer on the same day the contract was concluded, and on that day, on the same day, the revenue was recognized. So we have the revenue posting, which is represented here. So we have 1.5 million revenues and billed receivables. But since the payment is not due now, but in 36 months, so in a pretty far away time in the future, then there is, in this case, consistent, so a significant financing component in the process that needs to be recognized. And for doing this, the net present value needs to be calculated. So basically, for that, we need the contract amount, we need the duration. So what is the runtime of the contract? We need to know the yearly and the monthly interest rate. And then the net present value can be calculated. And what is calculated initially is the initial discount. And this also needs to be represented in the accounts of the company. So basically, there is in the first period kind of a correction of the revenue and the correction of the billed receivables by the amount of the initial discount. Then through the next 36 months, this initial discount needs to be, let's say, built back or unwinded by periodic postings, so that at the end, so after the 36 periods, we will have again, so the billed receivables as they were posted initially, recognized initially for the 1.5 million, but the revenues will be split into two different components. One is the revenue itself, and the other one is the interest income. And this is basically the result at the end of the whole period of time, which represents the duration of the contract. So if we look at the system configuration, so what needs to be done? First of all, the configuration is done based on an accounting principle in S4HANA Cloud. And first of all, what the customer needs to do is to activate the advanced valuations. Then there are 3-4 settings that need to be done in the system. First of all, aging increments need to be created, for example, for long-term, short-term, and behind each of these increments, there is an interest rate, which is then assigned to a business partner to a risk class. Another thing that needs to be done is the assignment of the appropriate GL accounts for the correction postings. And then to handle the reporting part of this process, so to show also these amounts in the right place in the financial statements, semantic text need to be updated with the respective GL accounts. If we look at, so what are the persons involved in this process? We have the AP/AR accountant, which posts the long-term accounts receivables. Then on the other side, we have a business partner or a business partner responsible. So a collection specialist, for example, who is responsible to enter or to maintain the right risk class in the master data of the business partner. The BPC expert is the person who defines the discounting rule with all the settings that belong to it. For example, the increments, the interest rates, the GL account assignments, the assignment of the reporting tax. And then finally, the GL accountant executes the discounting run at the end of the month on a monthly basis to post the net present value adjustment and then all the other postings with the interest income and the expenses. So if we look at how this looks like with regards to the periodic job, this is also done with the app scheduled general ledger jobs, which is also used, for example, to post foreign currency valuations or impairments and so on. And here there's a template available for the discounting of long-term assets and liabilities. So basically, you just need to select the template. You can enter your own job name to distinguish the runs one from the other. And then there are scheduling options that can be chosen. So it can, of course, the job can be started immediately, but can also planned to start at a certain day and point in time. And then there is a section for the parameters similar to the other closing activities, where you can enter the company code and the ledger that you would like to post to, and then some other parameters like the key date for the valuation. And then, of course, you can always do a test run first and then the update run later on. Yep, so that's basically what I wanted to show to you. I have also done a couple of screenshots for all the configuration steps. These are hidden slides in the presentation, but we will share them with you later on when we share the material. So you will have all this, let's say, step-by-step configuration that you can look at. And I mean, here the scheduler general ledger jobs should be already well known from the past, from the other advanced valuation that we have already delivered. So with that, I would go to the next topic where I would like to give you a short update, and this is the functional currency. This is, I mean, functional currency is a topic that we've been working on for a long time. So the first requirements came up a couple of years ago, especially because big customers wanted to have possibility to handle a currency which is their most important currency for their business. So, and this is exactly the definition of functional currency. Functional currency is the main currency used by a business or a unit of business. And it can or cannot be the same as the company code currency, so the local currency. For example, big customers who operate internationally usually apply, for example, US dollar as their functional currency independent on the country where the company is located. And so because of this requirement, so we had certain, actually it's not just one requirement, but it's complex requirements which includes a series of requirements. So for example, one thing is if you post a document in a currency which is not the functional currency, then there are certain rules to translate the amount from transaction currency into functional currency. So we had the requirement to translate it based on the document date and the document currency. Then what customers also wanted was the possibility to enter a manual exchange rate from the document currency to the functional currency at the time of postings. We had also requirements towards internal postings, so how they need to be converted in the functional currency. And then one very important requirement was about reporting, where we got a request to display the functional currency in a separated column. So in an own independent column where you really see the title functional currency, and you can always see the amounts in that currency, independent on whatever as what other currencies you are using, for example, as company code currency or group currency or so on. And so we basically we built a complete new functionality in S/4HANA Cloud. So in S/4HANA, first of all, we built a new currency type for the functional currency. And then we built up the configuration, which allows customers to define which of the currencies available in S/4HANA Cloud is the functional currency. So as you know, in S/4HANA Cloud, there can be up to 3 currencies in parallel: the company code currency, a group currency, and the freely defined currency. And customers can freely choose which one of these 3 currencies is the functional currency. And then basically what we did, we enhanced everything. So here I mean, I will not go through each and every point here, but I just thought it could be interesting for you to know, okay, what have we done with regards to the functional currency? And I mean, where are we now? So basically, we have enabled the functionality. Then we have enabled or enhanced the accounting editing options to let users be able to default the document currency with the functional currency. We have enhanced the verified journal entry workflow. We have enabled these accounting editing options also for APAR postings and clearing apps. We have, of course, we have enhanced the BSEC by adding the functional currency so that it's always written in each and every document in parallel to other amounts in other currencies that are set up in the system. And we have updated or introduced the transaction currencies to the asset accounting posting apps. We have also set it as basis for plan value reporting. So basically also reporting based on the ACWP table. And then we have also in the latest release also done some further enhancements. Here at the below part, you can see an overview on all the apps that we have enhanced and where you always can see the functional currency amounts if they are enabled. And these are not just GL apps, but these are all the asset accounting apps, some of the management accounting apps. Then we have APAR apps and even some industry-specific apps like the joint venture accounting-specific apps, which were also requested by some customers. So what we have not changed or enhanced are applications which are mainly based on the transaction currency, like the logistic applications. They will not change. So we even don't plan to change them. And also FICA and Treasury do not support the functional currency. But with this scope, we think we are pretty much done. And we think we have reached a very good scope with regards to functional currency. And this has so far also been confirmed by a couple of customers with whom we were also involved in the definition of the requirements and the testing. So by that, I am done with my part. I'm not sure how is the time. I think it's pretty good.
Yeah,
so
it's pretty good.
Thanks a lot. And yeah.
Thank you so much, Dolatella. Was very good. Then, or we can try already to answer the question. There's one question from Veronica. Is the functional currency just the labeling for convenience of business terms? Because anyway, we have 3 currencies, as you mentioned. It's not an additional currency.
It's a new currency type. That means it's also a new field in the ACDOC-A table and in the BSEC table. So it's stored in parallel, and yeah, you could say also redundantly to the other amounts or to the other currencies that the customer has defined in S/4HANA Cloud. And why we do that, why we store it, for example, redundantly in the BSEC table, because of performance reasons, so that you always have have reports with a good performance and not just no recalculation or things that needs to happen on the fly.
There's another question, how to activate functional currency for existing customers and what would be the implication in terms of activating a new currency?
I think it's not possible to activate it for new customers.
For existing? Also not. So it's only
no,
for new
for
customers.
existing. Yeah.
Mm-hmm. There's a question from Gaurav. Why can't additional currencies from 4th to 10th in ACDOC-A cannot be used for functional currencies? think that's an on-premise question.
Sorry, what was it? Okay, because we have just three currencies in S/4HANA Cloud. There is just the company code currency, the group currency, and a freely defined currency if the customer defines it. So you can just pick one of the existing ones and say, this is my functional currency, but you cannot use other currencies because there are no more than 3 currencies in the cloud.
All right, no more questions. I will stop the poll right now. Thanks for giving us some feedback. And going back to the agenda, let me share my screen. There is now a short break until 10 after. And at 10 after, block 2 starts. So there is an additional dial-in code for block 2 here, starting with an update on group reporting from Philip Aliband, an update on revenue and cost accounting from Chen Chu and Volkmar, and an update on the integrated financial planning content in SAC, the group planning model from Holger Faber. See you later. Bye.